few more spots. So if you are interested in joining us in August, I need you to reach out to me over at Support Carnivore Trading. I'm not trying to oversell it. Like the last four, we've sold out. So my mandate's going to get filled, but I do want you there if you think this is going to be something. I know Jen is working as we speak right now with setting up golf, right?
If you're a golfer, this is your only chance probably ever to play golf with Trader Z and Dutch at the same time.
At the same,
I think that in fact has only happened a handful of times in the history of our relationship that Dutch and I have even set foot on a golf course together. So it should be humorous and explosive at the same time.
Z, Jen is working on right now getting a driver made that's going to have you and Dutch like carnivore trading that we can give out to whoever wins.
All right, so we got a door prize. We're gonna have a door prize.
You and Dutch will sign. We're gonna get it. So I think
in all seriousness, if you are a golfer and you're coming out, bring your clubs. We're gonna have a good time.
Especially if you're a lefty, man. They don't have any stuff for me.
Play around with this. This is something that probably won't happen a lot. So if you're looking for some sunshine and a chance to get away, if you're an advisor, you can write it off. Bring your wife. So anyway, thanks for being here, guys.
We think you can write it off. So,
that's 75th call. We appreciate you being here. It's June 8th. Got a new little graphic here that was created for us. I appreciate that. I'm in no way that creepy in real life. But yeah, we like it. Hey, quickly through our disclaimer. Remember, we're not a registered investment advisor. Past performance is no guarantee of future results. All carnivore trading portfolios are hypothetical. Nothing on this call should be construed as individual investment advice, and you should always remember to do your own damn research, like these fine people do. And we beg, borrow, and steal from them. We give them credit. They do great work. We do some good work. I had somebody ask me once why I didn't create all these graphics myself, and I just laughed. It was like, well, what time would I have to find the next AXTI for you to buy? I have to steal all these charts. I wouldn't have time to do the other research. So no, I just thought it was funny. Look, there's all this great work out there, and we love to scrub it and bring it to you and synthesize it and tell your own take on it. So last call on our great observations in trading and finance, we talked about South Korea and the epic tear that had been on this year. And little did I know that when I mentioned that South Korean stocks had more than quadrupled over the last 17 months, trouncing every index, is that I was setting up a fantastic short-term short. So here's what played out in Korea over the last few days. It got really nasty today, down 14%. That's the index. So I'm not talking about an individual stock. Okay. And this is the weekly. This is the weekly EWY. You can see we went on an epic tear here again, not an individual stock. This is a country index. So driven predominantly by SK Hynix, Samsung, a handful of other companies. Definitely something to keep your eye on. Koreans are culturally, this might be a reach, but I think in the trading community, this would probably be accepted as truth. Koreans tend to be very aggressive momentum traders collectively. And so you can see here, you had aggregated Korean and Taiwan focused leverage ETFs they had 6x from the start of 2026. So this trade had gotten really, out there. And so maybe you're seeing a little bit of that unwind happen in our markets as well as some of the speculative excess comes undone. Here's another chart I thought was fascinating. Eggs. Remember the great egg spike of 2025? Well, like most commodity spikes, it's over. The cure for high prices was high prices, and now egg prices are down below 2017 levels. So hopefully we're going to see this play out in some other commodities in the near future. That will help the inflation story. All right, where are we? So here we are in the funnel. Look, things have gotten a little bit gunked up at the top of the funnel as we've talked about. last week's jobs numbers fed into that narrative of the Fed's going to have to be higher for longer. We've got persistent, sticky inflation driven by energy price increases as a result of the Iran engagement war, whatever you want to call it. At this point, the Fed is on pause, and the idea that we're going to get a cut in the next couple of meetings is pretty much evaporated. So the top of the funnel is okay. The credit conditions in private land, you're seeing a little bit of stabilization, I think, in that private credit bubble discussion that we have talked about on the call a few times. We thought that was more of a mismatch of liquidity than it was necessarily a general credit crisis or contagion type situation. That seems to be stabilizing. So credit conditions in general don't seem that bad. The primary problem we have at the top of the funnel is inflation and rates and that sort of higher for longer sort of story sort of sticking now. So commodities having a great year. We've shown you this several times this year. Pulling up the rear is Bitcoin and long duration treasuries. So this kind of probably as a result of this liquidity sort of not coming into the market as had hoped. Long duration obviously hurting from the inflation story. So I think that explains the Bitcoin long duration treasury move. You've got some market specific fundamentals playing out in Bitcoin as well. We'll talk about that later. But I think in general, the takeaway is that, again, bonds as an asset class are struggling to get any kind of footing in this post-COVID inflationary environment. And here we are with that 25-year plus zero coupon treasury ETF down almost 60% since that 2010 mark. But really, again, since 2020, you can see that's a 60% decline. That COVID era bond sort of implosion continues. If you're a financial advisor, and many of you are, I'd like to bring this up again. And I have brought it up on these calls a couple different times. Short-term correlations between stocks and bonds have reached really high levels. And in many ways, bonds are not continuing not to provide the diversification that they had in the past. And I think this is something you want to pay close attention to if you're out there parking, 30, 40, 50% of people's money in some sort of broad bond market aggregate index. You're probably doing them a little bit of a disservice. You're probably going to want to think more critically about how you go about getting that bond exposure, who the managers are implementing those strategies, and what your target rates of return are. Because the old playbook of, hey, retirees, 50, 60, 70, 80% of bonds has been a total debacle for retirees for the last, 4 or 5 years. And when you think about it on an after inflation basis, it's even worse. So, stocks are here as a alternative. They are volatile, but as we often tell you, over long periods of time, they clearly outperform. And we talked about, these three primary macro catalysts poised to drive stocks higher from current levels. Okay, that's lower inflation, declining bond yields, and accelerating corporate earnings growth. So what happened last week was you got a little, chink in this lower inflation, declining bond yields narrative, right? And so that really kind of offered the market a chance to technically cool off, and it had gotten really extended anyway. We'll pull some charts up here in a second. In fact, we'll start with this one with the 10-year. You can see the 10-year kind of breaking back up towards the top end of this range. We want to see this resolved in the other direction, okay? And we brought this chart up and shown you guys several times. Here's the 10-year. This is the most important number in finance. We'll get a weekly chart and go back out, like say 5 years, so you can get a real clear picture of this range that we've been in. The peak is this 4,997, so just below 5. We got up to 4,687 last week. We've got this kind of wedge happening here on the long-term time frame. We did have a series of lower highs, 4.9, 4.7, 4.8, 4.6. So it's going the right direction, 4.6. But we really need this to come back down and not break to the upside. Here again, I've said this several times on the call. As long as you're in this range, you're fine. I think any kind of move to the upside is problematic. You'll see it more dramatically, obviously, in the long duration bonds. Here's the TLT. But again, we've been in this range for a long time. I really want to hope and believe fundamentally that yields are high enough here in long duration land to keep this kind of giant, parabola in play for a long sort of cut bottom here. And if it's not even turning, out, as long as it just stays within this parameter where we don't get long-term interest rates spiking up with the 10-year. Look, totally possible, guys. In fact, if they don't get oil down, it may be probable. It's not probable yet, okay? But it is something that is possible, okay? And if you look at where oil is, we kind of just have not broke it down out of this. Oh, where'd all my tickers go? Oops. Let's see if I can get that to come back up a different place. Here we go. We'll just go here. Trying to get oil up, guys. Sorry, bear with me here. So here's that pattern in oil we're talking about. You can see it pretty clearly on the daily. We got this downtrend line that's holding, but we got this bottom sort of line that's in play as well. So we've created this wedge between 119 and, say, 80. And it's compressing now into this 90 point. And at some point, we're going to either get this or we're going to get this. What you hope is you get, some sort of resolution in Iran, and that obviously craters oil back down to 70s. That's the bullish scenario. I think that would obviously coincide with a rally in long duration bonds. So you would see TLT shoot up to 90. So, yeah, I mean, look, that's something that I want to see. Here we go. We got a live price here. So we're at 92.16. You can see on the 30-minute chart just kind of banging around $90. So very interested in oil still. Super important, guys, because I think that's the inflation story all in one chart. Okay, let's talk stocks. Look, guys, the tech sector ETF's recent 47% rally over 9 week was its biggest 9-week advance ever, even exceeding the parabolic move higher in late 1999. Okay? So for anybody that's crying about Friday, go cry me a river. Okay? Like, we've been on an epic run. All right? Like, epic. You're up like 50, 60, 70% on the long term halfway through the year. Sector rotation portfolio was up 100 and something percent halfway through the year. Like, if you want to make that kind of money, you got to get ready occasionally for a shellacking. All right? It's just the nature of the game, particularly after the move that we've made. So here we are. You get this massive move up and you get a nasty correction on Friday. All right, well, let's look at some charts. So let's get the 21-day up, because now, as you know, the 21-day is your short-term trading guidepost. Your 50 and your 200-day are your long-term guidepost. Your 21-day is your short-term. All right, we're just below the 21-day. So the first order of business is to reclaim the 21-day. The good thing about the move on Friday is you completely burned off this nasty overbought condition we had been in for months, or weeks at least. So that's gone. So you're no longer overbought. Okay? That's great, because we were really overbought. So you burn that off. All right? Now you got to find a home somewhere around the 21-day. All right, you're sitting around that right now on the S&P. It's a similar setup in the Qs. The 21-day is about the same spot. The Qs took the brunt of the beating on Friday. That's right, they should have, because they had gone on the biggest run. Makes sense, right? What goes up the most comes down the most. Here we are. There's that overbought condition that had gotten really out of hand. It's gone. Qs are already back above the 21-day. Great sign. Now you want to see them hold it over the next few days. Okay. So Let's pull up the other indexes. The reason why I don't think we really have a lot of downside left, even if we've got to base out for a few weeks, guys, is I don't think the Dow's giving up the old highs of 503. That's your breakout point on the Dow. Okay. This is where you gapped up. I don't think you're going to give that back up. And if you got more downside, I think it's limited. I think it's probably limited to about that old high. You're not that stretched on the Dow. The 50 days right there, the 200 days right there. Okay. So the distance here is not that far. We just didn't have the huge run up in the Dow because of oil. Same story with Russell. Okay. The Russell, like the Dow, is not as extended. You weren't as overbought. So you're above the 21-day on the Dow. On the Russell. And the 50's not that far back behind. In addition, in the IWM, you've got this 211 that held several times, not that far away. You've also got this whole old low here, an old high of 280 that you bounced off of. Okay? So I got a confluence of support right here at 271, at the 50-day at 274 and 280. So what I'm telling you is there's a lot of support right there in the Russell. So even if you bang around here, for a little while, and even if you had a few more down days, okay, I still think you don't give much of that up. That's going to allow the 50-day to run up here. And here again, now you've burned off all the overbought condition. Okay. So the S&P, you've got this little series of supports around 731, which was an old high, old low. Okay. So kind of watching that. And then, of course, watching the intraday low on Friday, which was 735. Right. You'll also want to keep your eye on the RSI to see if that low holds and what plays out here. MACD is rolling over, but I don't like that sloppy MACD setup in a bull market. MACD and that kind of setup, that's a sloppy rollover in a bull market. This is a clear signal in MACD. Okay. You had a nasty sell off. It had been a long time running into it. Right. And then boom, you get a swift cross. Okay. That's a signal. This is how MACD looks in the top, when a market's creating sideways. We'll see if it rolls over. We'll watch it. But that's an indicator to see too, how low could the RSI go? If you got down to the 50, you'd probably start getting oversold. So if you're really kind of more bearish, maybe your 50-day comes into play. That's a long ways away down at 715, guys. Okay? So not saying that's not a possibility. What you want is what you're getting today, which is more something to play in this range up here. Right? It's always easier to stay patient and wait for the next leg if these lows hold and it looks like we're consolidating versus rolling over. Okay. Those are all short-term sort of support levels and whatnot. Guys, that's the technical picture. I think a lot of this is going to be driven by oil. But let's not lose sight on this CapEx spend. Okay, because I want to make a point about where we're at. I think now, and I think it's really important. And I think if I'm right, then it's something that probably means that we have a lot more upside to go in this bull market. Okay, and here it is simply. The Mythos rollout exposed AI's military and cyber potential. I think this has been completely missed by Wall Street. And it underscores that advanced models are no longer just productivity tools, but it's now a strategic weapon. And that AI has gone now from a commercial race to a national defense imperative. And because the United States cannot afford to rely on black box systems it does not fully control, while China is rapidly integrating AI across its military intelligence stack, the policy implication will now be clear. Washington will now need to treat frontier AI development like an arms race, prioritizing secure, audible government line capabilities to preserve deterrence, cyber defense, and battlefield superiority. All the funding into AI tech, memory fabs, chips, data centers has been funded by private companies thus far. What comes next is the U.S. administration will take stakes in AI companies with the backing and full weight and might of the U.S. government, building all the AI infrastructure needed for this revolution. Both the U.S. and China will pour national strength into AI, and the competition will be exceptionally fierce because everyone wants to win AI, and it's too important not to go all in. The U.S. will borrow unlimited amounts of money to fund these companies. But where does the money flow into? All right, think about that, and then tell me that you're still bearish. Because the announcement came this weekend. They're already floating it. Okay? So you got to start playing some game theory in your head and say, okay, is America just going to concede the last great technological race to the Chinese? Really? Our government's just going to just say, no, we're just going to concede the last great technological race to the Chinese because of money that we can create out of thin air and print. It's kind of nonsensical when you think about it to even say it out loud like that, right? So I think you got this, and this is from James Thorne on X, because you get this sell-off on Friday that was driven by a good jobs number, all right? A solid non-inflationary jobs print gets spun as a problem because the street is still hardwired to believe that growth is bad, wages are dangerous, and the Fed must tighten. Okay? The instinctive call for more hikes off this tape isn't data-driven. It's dogma. It ignores the obvious. We are in a supply-side expansion, not a late-cycle demand blow-off. This is key. Okay? This is key. Wall Street reaction is the tale. The consensus is still Keynesian, and they believe a worse Fed will continue the Keynesian dogma. And they're wrong. We've got Trump-era deregulation. We got pro-energy policy. We got AI build-out. Their textbook supply side, okay, that raises potential output and eases real constraints. Treating that as inherently inflationary is a category error. The market reaction today is your proof that most desks never opened a supply-side economics text. They are still running a Phillips curve model that died in practice years ago. I think James is right. I think James is right. I think it's just all an extension of this lack of belief in this technology and what it's capable of. And I don't think unless you're sitting close to it, you just don't really get it. I'm telling you, like the guys that I know that I grew up working with on Wall Street, they don't get it. They don't get it. Because they lived through 99, they lived through the tech bubble, and they're so damn scared. They just think that's what it's just another bubble. It's just another bubble. It's tech all over. It's the internet all over again. I'm telling you, I don't think so. Hey, couple of thoughts about Friday's technical action, okay? There have only been 4 times in the past 20 years where the S&P collapsed from above the 80th percentile of its forward range to below the 20th percentile in just a single day. 3 of them in the past year, including Friday, each time has marked a low point and the S&P rallied from then. So I thought that was interesting. The other data point, guys, that I found from Wayne Whaley was here's the S&P performance after a 2% down day that was preceded by a 10% quarter. Okay. So here are the instances. That was Friday. Okay. Here's the forward S&P performance for that setup. It's a mixed bag, but it's still overwhelmingly positive. Okay. Even 1 week out, 23 to 11. 1 week out. Higher. 24 to 10, 4 weeks out, 30 to 4, 13 weeks out. 32 to 2, 26 weeks out. Okay. After the S&P has a 2% down day, after it was preceded by a 10% quarter. So just food for thought about where we are. Look, guys, I could be wrong. Okay. But I think what you have is a US AI revolution that's going to be a government-backed super cycle. All right. Private capital already funded the core of it. The US government now takes stakes. It's a race between us and China. The funding is essentially unlimited because you got a printing press behind it. The money flows straight into the AI ecosystem, which is semis, infrastructure, and apps. All right. You got Trump, Musk, Jensen, Altman, Taiwan Semi, and Micron all telling you AI is just getting started. Scale will dwarf current expectations. Market acting like early internet bubble, spooked by the upside. Okay, there we go. Now let's talk about the trend. We did get downgraded on Friday, guys. Okay, we were downgraded to 4 or 5. It's the first downgrade in a while. So the trend model did weaken. You have to take note of that, especially in your short-term trading, right? And the Dutchman has done that. Okay, the short-term trading is absolutely impacted by what played out on Friday. Okay, and the trend model has changed from 5 of 5 for the first time in a long time. That's a negative. Okay, so what we want to see is all the 21 days to be reclaimed on all the major indexes on the weekly close. If you can do it on the weekly close, you go back to 5 of 5. Okay, so we'll be keeping our eye out on 4 or 5 to go back to 5 of 5, or from 4 or 5 to 3 to 5. If we go to 3 to 5, that's really bearish, right? You're going in the wrong direction in the trend model. This is when the trend model is useful. You want to get bullish from 2 to 5, and from 5 to 3, you want to rapidly sort of start decelerating your exposure. And look, guys, we've raised cash in short term. We've raised cash in sector rotation, right? I think we're up to 15% cash in sector rotation. So we're going to probably do some selling in long term, but we're not going to really raise any cash in long term. Okay. Earnings, I'm not going to go on and on about repeating some of the things that we've been talking about, but it's been an incredible earnings season. That is behind us now, though. We've kind of lost that catalyst. It brought the forward earnings down, multiple down. But what I do want to bring up is this. This price earnings to growth, of course, Peter Lynch's favorite metric, the great Fidelity manager, growth stock manager. And what I would comment about this chart is some of the stocks that have run the most actually have the cheapest forward PE/PEG ratios. Look at Micron, look at SanDisk, look at Marvel, AOI, NVIDIA, Credo, COHR, Light, all below 1 price earnings growth, which is incredible. Okay. Even for something like ARM or AMAT or ANET or Taiwan Semi, these are at the current growth rates, these are still pretty attractive numbers. So what this tells you is the market really hasn't. I don't think they believe, the market doesn't believe these earnings are going to play out. That's why you keep getting these ridiculously low multiples. We're going to see with Micron and memory. This is the one, to me, is the poster child of this debate, because this was a highly cyclical industry that has gone parabolic, and the stocks have gone on this epic run, and now are maybe cooling off a little bit. And the question is, do we go into some sort of deep correction, or do we just base out for a little while and let these fundamentals play out, because Micron is actually still really cheap. That's where the market is, guys. I mean, there's this real debate right now about whether this AI CapEx spend is real, and that's why you're not getting insane multiples on these companies. Now, what you can point to as the poster child of this is NVIDIA, right? And here NVIDIA is. NVIDIA's net trailing PE is 20 times. Okay? So, this is where we're at. We're talking about a company that's growing rapidly. Its PEG ratio is less than 1. It's a leader in probably the most transformative technology of our lives, and the market's giving it a 20 PE because they don't believe. It still doesn't believe that this cycle is real. It's going to continue. So it's very fascinating, right? Like, this is a very fascinating environment to be in because it's not like 99, because Cisco didn't look like this in 99. Okay. And we've got this boom in earnings that we've talked about over and over again. It's truly distinct because it's coming in an environment that's not off an EPS drawdown. So it's a really spectacular earnings season that we just went through. And I think here again, it's more akin to 94 than 99, guys. So while everyone is talking about, bubbles and SpaceX as being sort of the epitome of that bubble, I'm gonna offer a counter narrative and say, here's Barron's saying SpaceX IPO looks way too expensive. Okay. I mean, guys, when are these assholes right about anything? I'm being honest. When are these headlines on things like Barron's ever right? Okay. And so, and people say, oh, the valuation is absurd. All right, let's, you know what? I saw this. Let's do this. This is good. This is a really good exercise, because what this shows you is the IPOs of Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, and Meta. Okay. It gives you what the sales at IPO were. It gives you an actual price to sales at IPO post dilution. And then
they said that they said that Facebook was overpriced at $20.
So okay, this is what I'm trying to say. Then they give you what the correct price to sales should have been at the IPO to give you an equivalent S&P 500 return, because these stocks all dramatically outperformed the S&P, right? So if you wanted to have just gotten the S&P's return from these stocks, Apple would have had to trade at 50 times sales at IPO. Okay. Meta would have had to have been at 44 times sales at IPO for you to just get market returns. So let this compute. Okay. Nvidia would have had to be at 1,000 times sales at IPO for you to gotten market returns. Okay. And so what they're saying with SpaceX is, you're paying 70 times price sales. Well, Ron Barron says it's going to be a $10 trillion thing, and Ron Barron's been more right about SpaceX than a lot of people have. Has he not? He's a billionaire.
Yeah.
He's averaged, 56% return annualized over a decade in that investment. So I'm inclined to look at a guy like Ron Barron, who says, I'm not selling a single share of SpaceX, and I've been an investor since day one. I think it's going to be a $10 trillion thing. I wonder what he thinks the correct price sale should be at IPO to get a market rate return. I bet it's like 500. So I think this IPO it just is like the quintessential example of why this isn't 1999, guys. People are shitting all over it. Now, it is oversubscribed, and there are people that want to play, right? But you ask half the people on the street what they think of Elon Musk, and they'll tell you he's the devil. So I think there's a lot of sentiment out there that's pretty negative for an environment that has been, I don't know, supposedly a bubble, a euphoria. Okay. Let's look at some of these stocks, guys, and think back now, because we had this list and I showed you these 3 slides on the last call. The fact that these stocks pulled back like they did should be in no way a shock. These stocks were up this much this year. Okay. SanDisk up 500%, Micron up 200%, Dell up 200%, Bloom up 200%. So we had stocks up 400, 300, 200%. Okay. We were due for a pullback. We may still be due for more of a pullback. Okay. However, it doesn't mean that this is over. Okay. And so that's where this gets tricky. This is where you have to start segmenting your strategies. Okay. Shorter term traders, you got to tighten up. You got to tighten the belt. Okay. We're below the 21 day. We had a violent sell off on Friday. Growth stocks pulled back 20, 30% in some cases. Okay. They're signaling that. So you reduce your exposure. You trade differently. You don't trade as big. You become more critical of your setups. You look harder at them, right? Over in sector rotation, though, it's all about incrementalism, guys. I've already raised some cash. I got 15%, right? What happens this week? Do we go up? Do we go down? Right? If we sort of find some sort of footing, maybe I do nothing. Maybe I find something I want to buy. Maybe there's something I want to add to, right? But you've got to have a time frame and a discipline, and you got to stick to it. And that's why we encourage you to have different accounts so that you can probably do it more effectively versus trying to do this in some sort of blended manner. Okay, so we've told you that we think we go from this AI infrastructure boom into a power bottleneck and then eventually into an application layer runoff. We've told you that we think software is sort of now overdone on the downside and has a chance to recover. Okay, and you've seen that help the market over the last week, but it's been hurting the last few markets over the last couple of days. So this will be interesting to see if we can get that kind of back in, motion, right? The software names. You've got what we've called the Trump pump, right? Where this whole array of stocks in the AI structure, in infrastructure build out, in memory, in semiconductors, in photonics, in space, they've all benefited from a very pro-stock president, right? Who actually will name names from time to time. And that has led to some thematics really standing out, guys, right? And we really, guys, this Carnivore 33 and the Carnivore 100, when it's rolled out, is going to be really something special in terms of how we track these thematics on a go-forward basis. And I'm really excited about it. And I'm really excited about rolling it out in California. And these thematics have been critical, guys, to understanding what's been playing out this year. And it's how we've had so many big winners, because these optical bottlenecks are not going away. And so what you realized, and kind of listening to Jensen this weekend about kind of where we're at, is you realize that now making all these GPUs and all these semiconductors talk to each other in the fastest, most efficient manner, and the most, from an electricity perspective, efficient manner, and from a speed perspective manner. It's all about these lasers and photonics, okay? And so I think what excites me most about some of these thematics, particularly like this one, and I was talking about this over the weekend on the Direct Access thread. I was like, look, guys, when you have these kind of sell-offs, you got to take a deep breath and say, okay, now we let this play out. We let this market correct or chop sideways or do what it needs to do to sort of burn off these overbought conditions and set up the next leg. But what I'm going to do is I'm going to find the next big winner. I'm going to find the stocks that hold up the best. I'm going to look for the stocks that don't roll over. Okay. And I'm going to look for the ones that hold their 50 days in the sell-off, and then the ones that come back quickest and the strongest. And right now, I think a lot of those are in that photonic sector. Look, GLW is kind of one that I'm talking about, where this is a stock that it didn't give up the 50-day, and it didn't give up the pattern, and it set a higher low. So You go from 169 to 174 and you bounce, and now you're right back in this range. And probably what you've got is a little consolidation pattern. And it may have to bounce around in here for a few more days, right? But as long as you hold that 50-day, I think that sets up for another leg. And you see it in the more speculative names. AAOI is one that I talked about a lot on the thread this weekend because, guys, this is a company that the backlog is real, the orders are real, it's already on the books. The question now is really about the company's ability to execute, right? So I think when I look at something like an AAOI or a GLW or a lot of these, even AXTI, which is at an inflection point because you're at the 50-day, right? Don't want to see that give that up. It's been a sort of a key to that run. But these stocks all have great fundamental stories. But if you break these technical levels, then maybe that trend is over. We haven't yet, but it's close. So that's leadership. So what I'm doing, guys, across the board is I'm looking at all the leadership sectors, right? Compute, memory, semis, networking, optical interconnects. You've got your AI systems, hardware systems like Dell and SMCI. So we've got the cloud, compute guys, which is NBIS and IREN, Cypher and Hive, right? We got infrastructure plays, VRT, PWR, power and grid. Here's the drones, cybersecurity, AI software, space, quantum, robotics, copper, nuclear, autonomous flight, which is like Archer and Joby, critical minerals, fintech, cloud software, and the Mag 7. So these are my thematics. Okay. And I've constantly got Victor Nostradamus trying to find the strongest names within these thematics. Not just from a technical perspective, not just from a price action perspective, but also from a fundamental perspective. We want to find the best fundamental stories and the best relative strength stories within all these thematics. Okay. And then we want to see which ones hold up the best, because those are going to be your leaders when this market finishes doing whatever it's got to do for the next couple of days or even weeks. Okay. So here are these themes. I've got them on my watch list. I'm watching them, relative to their 50 days. I'm watching them relative to their 21 days. And I'm looking for leadership so that I can point to some and say, hey, this is a clear leader in this down market, right? And a lot of these names, because we've traded already, or they're in the sector rotation list, or they're on the long-term list, all right? But what the Carnivore 100 and the Carnivore 33 is going to do is automate this and put it on the dashboard for everyone to access 24 hours a day. So you won't just have to look for this information from me on the calls. But anyway, those are our core themes. We're watching these stocks. Some of them, are in interesting technical positions. Guys, I'm watching names like IREN because, we don't really have a lot of room between the 50 and the 200-day here. Okay? So I really want to see, this continue this pattern of running up, right? Because if it doesn't, then I'm wrong. I could be wrong about my thesis. I could be wrong about the time. I could be wrong about the pattern. And maybe, we've got to go into a bigger, more longer term box structure like that. That's possible. But what we want to see, right, is for a name like this to just continue up and break to new highs. All right. And I could do so many names like this. ASTS above the 50. Need to hold that, right? Here's the 200-day. So for some of these growth names, you're really not that far from the 50 and the 200-day. You want to see those names giving that up. Rocket Labs, obviously space. Hey, we got the SpaceX IPO this Friday, so that's why I'm talking space. Pretty nasty, sell off 50 days at 97. You're at 106. PL was a disaster. No bid today. maybe time to exit PL. You've broken the 50-day conclusively, right? So those are some names in that space trade. NVIDIA trying to hold the 50. Important, right? We retook the 50 back down here on the rally. I'd like to see that hold. Other leaders, that have had trouble, like Meta, kind of trapped. This is probably one of the lagging Mag 7s. So it's lagging on the index, it's weight on the index. You can see, year to date, and really since 2025, no real return from Meta. But compare that to something like Google, which has been clearly the leader this year in the Mag 7, right? So there's some dispersion even in Magland, guys. You got Google and NVIDIA doing fairly well, but Microsoft and Meta and Amazon lagging a little bit. So maybe time to go sideways a bit, guys. When you look at this, we really could be setting up for a June and July chop shop, and like Dutch senses the difficulty of short-term trading in that, and that's why he's kind of trimming things up and getting ready to kind of grind it for a while. And that's if we don't even correct more, right? So I think when I get to the sector strength, though, I've got a couple of bright signs that keep me somewhat positive. And really, it's this transportation air freight going from 25 to 12 and this trucking and transport being number one. To me, these are good signs about the broader economy. I've also got steel, and I've also got managed care coming into the top 10. So we're getting a little bit more participation. We got oil and gas from 28 to 15. So probably not a bad sign that you're getting some broadening out. We were too concentrated in tech. You see that again over in VectorVest as well, because we got healthcare, we got retail, insurance popping up. Also got a good sign last week in that we had 15 stocks move near the pivot. We were running out of stocks near the pivot, guys. Everything had stretched so far. But a lot of these stocks are in different sectors. So you've got Merck, healthcare names, banks. A lot of bank stocks broke out. There's UBS. So that's probably a good sign to see financials. So what I would probably tell you that, the bulls want to see is a little bit broadening out, a little more participation, and then let semis and some of those red hot sectors cool off, but do so in a very calm, consolidated manner. Like today. Today's pretty good action after Friday, right? So, these are 15 names that are near their pivots, and it's been a while since I've seen that many, so that's probably a good sign that we're getting some improvement there. You can tell, guys, from my Momo list that we have some movement today. There's our Sivers Semiconductors. Got Intel battling back pretty nicely, AOI as well. CBRS, that IPO that just totally imploded, maybe bottomed at 200. IPOs are tough, guys. We got IonQ rallying. There's A-Lab. So you've got some movement today. There's IRN kind of bouncing hard like we want to see. So, look, this is a lot of what got nuked on Friday, so it's good to see it catching a bid today, but it's got some work to do. There was real damage done on the charts. I think for me now, I want to see if all these Friday lows will hold. Oscar looks like it's trying to break out of a long-term pattern. But look, guys, what I'm saying is when you come in and actually look at the lists, and you say, okay, hey, we got downgraded from 100 to 80, 60, 80. Okay, that pretty much coincides with the downgrade to 4 or 5. But when I look at the IBD 50 and I look at market surge, not bad after Friday. This is what you wanted to see. I mean, if you're a bull, you want to see Micron up 11%, coming back hard. Here's Credo coming back hard. Hey, that's when I think fundamentally looks really good. Okay. Meaning we may have to jostle around here, but I think 200 is probably going to hold, and that stock's going to run to $300-$400. Okay. So that one's on my list. I'm going to buy it today on the long-term list. But, look, guys, here's your IBD 50 list. That's not a bad day. Coming into your market surge, your 250. Still haven't completely got used to the retool on the market surge. I miss my old. But look, guys, I got Marvel up 15 pings on the long-term list. That one's came out of the gate hot. Hey, that's a good stock, guys. Keep your eye on that ping. Right in the heart of AI. Here's MU, A-Lab, KLAC. There's Oscar, Credo, AMAT. So SanDisk. Look, there's some movement on the 250 list. Good sign. All right, that's what we want to see. So systems check, I would say not bad. Just need to see it hold here, right? All right, Dutchman. We went to cash this morning, my friend. You're on mute, buddy.
Yep.
We got a lot of dry powder, and we're gonna look for strength, and then we'll take it as it comes, right?
Yeah, I think I see a head and shoulders developing in the S&P 500, and I'm early. So I'm looking for it to float up to like 75.17. It's at 74.54 right now. So if it floats up to in the next day or two to 75.17 and then starts to fail and roll over, then we've got the second shoulder taking place. And if that happens, then I think this thing drops to 7,000 on the S&P, and we test that support level down there. Now, if that shoulder does not develop, and I'm just looking at what could be taking place, two different scenarios, that one, or we stabilize here sideways till June 15, another week, and we get a catalyst, perhaps it's oil. Trump has indicated finally that he said he's actually come out and predicted when it's going to start coming down. I think he may be trying to time this, believe it or not, so that oil drops dramatically and helps out with the midterm elections. But if oil is the catalyst, which we've been looking for, then this thing doesn't develop a shoulder, it takes off. And this was a really ripped pullback here, and it goes up into the green box that we have on the S&P 500 large cap index chart that we put in the wrap every day, right? We've got a line that we drew on that where we expected there to be a pullback, and we got it, and then we expected it to advance, and we got it. We did not expect this pullback to come as a second test to that, but so be it. I'd rather be in cash here. I don't want to be short. I don't want to go, short oil right now. I think it's probably not a bad bet if you're going to go, but we made our run at that. We were early. It might be time to start thinking about it over the next 30 days again. But right now, with what happened as a short-term trader, with what happened on Friday, I have to step aside. You know what I mean?
Yeah. Hey, look, for short term guys, I think, stepping aside here is not a terrible thing. Hey, the only thing I will say, Dutch, is I don't think you get down to 7,000 in the S&P, because if you do, at that point you're going to have rolled over the Dow and the IWM. So if you get to 7,000 in the S&P, I think that makes the IWM and the Dow look like you've topped, and I'm just not thinking this is a top. So this in the Dow, if you got the S&P down to 7,000, you're going to get the Dow way back down into all of this, which is totally possible, guys, especially going into the summer. So here again, think about what Dutch is saying about short term, sector rotation, guys. That's being run on a time frame that, like, you can't sell half your portfolio because the market goes down 4% on a Friday. And if you do, you'll never be up as much as we are in the sector portfolio as this year. You gotta have, because this year we've already had this type of drawdown like twice. So if you want to be up 100% in 6 months, then occasionally you're going to have a 20% drawdown that you're going to have to sit through. And that's kind of where we're at, right? So I do think Dutch is also right that the catalyst is oil. And the flip side is, if you don't get it to roll over, well then, you're walking into midterms, and you're walking to a backdrop without a catalyst, right? So you've taken probably the one last catalyst the administration has, before the election, which is, okay, if we can pop this oil move, then you can maybe get this inflation narrative to subside a little bit before the election. If not, you're walking head first into the election with diesel at $5 a gallon, right? And if you followed the California mayoral race, that whole political scene is heating up already. So I think, look, it could get politically much more heated in the coming months, which may serve as a less sort of, positive backdrop for equities in general.
It's the only thing people are talking about out here. It's pretty insane. It's just it's really getting hot out here. There's some people who are really, really nervous about getting busted. And it's about time that they all do get busted for all this cheating. It really is. It's so bad. The fraud is so bad in the election system. It's not just elections, it's everything. Okay, it's everything. There's so much fraud. Every time you turn left, there's more fraud. But the election fraud in California, Trump was not lying when he said, hey, this is where it's going to really, it's really bad. It's worse than you think. It is. It's way, way worse than you think. But this time, they're watching it all. I think they've set them up, frankly. And they're letting them run the fraud so that the crime is complete. And then they're just going to hammer it. And those people will become extremely violent and very desperate, I think. So yeah, it's heating up, man.
So the only other thing, Does you got anything other short term?
No, we're just looking for short term trades, but it's a little dicey right now. We're just going to step aside a little bit. And it's not that I don't want to do something, and there are trades developing every sort of minute, every day. There's little things you can do. You can, if you're a short-term trader, there's little pullbacks you can see. Look for really strong stocks. Look for stocks that might have been beat up. Something like an APP or an AVGO where, there's opportunity. I like the safety level of something that may have, pulled back, but has a nice strong bid. FPS is a strong stock. And we've been playing that, and no matter what's going on, the thing just seems to sit right at 59 or 60, but it's interesting. You sent me something interesting over the weekend about Micron, and it speaks a little bit to being too eager to buy at the open. Remember that chart you sent me?
Yeah, no, actually, I sent. It's not even just a chart, Dutch, and I didn't even send you the white paper. It's actually a white paper, and
that's
it's
right.
called the overnight drift. Okay,
right, And so he showed me that if you went back over an X amount of years and you bought Micron at the open every day, and you sold it, at the close or whatever, you would have lost like 98% of your money. But if you bought it at the close every day and sold it at the open, you would have made this insane return. like it's so insane that I can't even tell you. Like 382,000% or something over the last X number of years. I mean, it's just so we have a tendency, all of us, whether it's direct access or everybody, we're geared into the pre-market. We're geared into identifying stocks we think might be hot. And we've talked back and forth and argued back and forth with one another intellectually about whether or not it's better to hold off for 20, 30, 40 minutes before we sort of go into things. And in reality, in this kind of a market, it really is better to do that, because what we're seeing every single day is stocks selling off and then dishing out, as I say. I call it dishing out. It makes kind of like a little dish pattern, like it sells off and then it kind of dishes out like this, and then maybe you get a lift, right? And in a bull market, you get a lift where the close is actually higher than the previous days, than your open. Okay, it's higher than where you open for the day. You might have sold off during the day, but at least you close higher than your open. That's a really good, healthy bull market. We are not getting a lot of days like that. We're getting a lot of days where the market opens and maybe you'll get a spike in the stocks and then they just sell off hard. They have to dish out, and we find ourselves having to try to climb out of a hole every day.
Hey, I got to interrupt you there, though, buddy, and say I think that's where it's not this market. That's actually how the market works. That's what this paper, and that's what I'm trying to communicate, guys, is that this is a phenomenon that is statistically measurable, and it's documented by white papers. You are better off going long at the close and selling at the open. And this is a phenomenon that has not existed like right now, Dutch. This is a phenomenon that has existed for decades. Okay? And it's because basically the nature of it, in my opinion, is because markets have become 24 hours. Right. And Asia is already open. Okay? And so what happens is, it's like even like a day like today, you come in, guys, the market is up. It's up for the day. Like it is decided before you came in this morning, it was going to be up for the day. It was decided overnight. Now, the problem is you want to come in and chase it. Okay? And the problem is like, if you're going to chase it, well, you got to chase Marvel that's up 5% that's going to run to 13% in a bull. Okay? But a lot of times what happens is you'll come in and Marvel gaps up 13%, but then it closes up 8%. That was still a really good day, but there was no opportunity for you to trade that during the day. You had to be long the night before.
Right.
Okay. And that is part of, I think, the advantage of being long in this market, because the moves were happening. You would get like today. If you were already long, you made the money. If you tried to come in this morning and get long, you've already missed a bunch of the move here again, unless you came in and you bought, you
Put it
know,
down.
AAOI at 183 and then it went to 202. And so I think if you're a short-term trader, you got to start thinking about initiating positions at the close.
Well, we got a lot of cash, and we got a day of trading here, and we can put it to work today at the close. What the hell?
Hey, the flip side of that is everything that Dutch has said about Friday's action for short-term traders is completely true, guys. Because look, I'm going to use Micron. Micron is the poster child of this market, guys. It is up hundreds of %, yet it trades at a peg of 0.4. Okay, so it gets into this idea of, are you looking at charts? Or are you looking at earnings? Because the chart says that it's stupid, but the earnings say that the chart is stupid. Okay, so this is where we're at. But when I look at this chart and I see Fridays, guys, what I see is a stock that needs to do this. Okay, that's actually what I want it to do. I don't want it to turn around and go up higher, because you're just creating more of the same parabolic conditions. What I want it to do is to go sideways and create a base so that everyone can say, oh, look, all of these wonderful stocks that ran up, they're not rolling over. They're just basing for the next leg up in a bull market. But when you start chasing this, right, it could go up here and turn back down. It can go back down. And so then you get all emotionally caught up in this, right?
Z, the question that people ask on this one, we've got one in the chat right now, is how do you start on this stock, though? Because the pullback is so wicked if you weren't in it 2 months ago. How do you start here?
Hey, that's a great question. And look, guys, that's why I always say, like, I'm just going to be honest, guys. The reason why it's easy to hold some of this stuff in the sector rotation portfolio, and we'll kind of transition to this now, is because my cost basis is so low. Okay? But I'm not in Micron right now. I'd kind of like to be in memory. I kind of didn't make the most out of memory. SanDisk and MU have both pulled back. I like SanDisk as much as I like MU. So, I'm eyeballing it. And so to your question, how do you initiate a position in it? Well, you buy a little bit of it. You don't buy a lot. You buy a little bit of it. So, hey, if I get inclined to actually put some of this money to work, right, I've got 15% cash. Well, maybe it's SanDisk. Maybe it's Micron. If it'll trade sideways for a few days and not roll over. Okay? But, you got to zoom in. Let's zoom in a little bit. Let's look at it like a 60-minute chart. So here's your high, 1861. You're at 1514. Okay, well, there's your range. What you want to see is a box.
And you brought up a good point just now about you zoomed in to get to a 60-minute chart. I don't think my charts go out to 60 minutes. So, you brought up that point the other day, I think, in the Direct Access forum about how far you look out versus maybe.
Yeah. Hey, look, guys, all these, here's a Micron or SanDisk, hourly chart going back 3 months. This is the trend. So you kind of, here's your MACD. So the shorter term is like, okay, well, was that the bottom? I don't know. I won't know for a while. But what I want to see is this stock trade here for a while. If it can hold that low, maybe. If the markets trade sideways, maybe. But the ones that I get, the ones that I'm most excited about right now fundamentally would be some of those I just talked about, like an AOI, which I think has just an incredible runway, trades at a $15 billion market cap, and it's like, okay, you're going to be doing, $1 billion in revenue a month, and you're trading at a $15 billion market cap. That doesn't make any sense. Okay, so you start looking at, but this is a choppy trading stock. It doesn't trade worth it. It's hard to time. So some of these, I think you kind of just have to like sit back, let the market play out. Okay. In sector rotation, I've got 3 stocks now that are in the negative. I got ASTS, I got First Solar, and I got TE. No biggie. Nothing's down double digits. All right. But if they go down further, I might cut them. I could go in and say maybe I'm going to reduce AXTI and ARM again, take some more gains because we're up 100 some odd percent. I've done it with NBIS several times. So, it's kind of like, all right, we're going to let this shake out. I'll let my losers play out and reveal themselves. When Friday comes, I'll cut them. And if I've got stocks that are strengthening up, like maybe Marvel, maybe that gets added to. Maybe SIVF gets added to. If it's strengthening up, maybe AOI or Credo gets added to if they're strengthening up.
So this is one of the questions in the chat too, because they said, we all know this is one of Z's favorites. Is this a buying opportunity here?
What I would say, guys, is let this stock play out for a little bit, right? And see if you can kind of hold right in here around 230.
Because we're right there. Yeah,
we're right there. And look, even if this thing got down to the 50-day, that's a long ways away. I mean, look, guys, this thing kind of has a way of doing this, right? I mean, it's not about the day-to-day price action when you're playing for 100 points. So what I want to see this one do is hold here. Same with BE, 50 days right there. But you've been here a couple times, right? And you've worked that off. So, look, guys, we could come in and Dutch's head and shoulder could be completely right. Say we come in, we get this, and then we get this, and then we get this. All right? Well, that means on Friday, I'll probably be raising more cash. But in the end, I'm still of the belief that this market ain't going to break this right here, and that eventually, post-election, we got another leg coming. And that's how I'm going to play that game, because that's the time frame that I'm operating in, right? So we sold NBIS to 10. We sold Rocket Labs to 5. Those were all big winners. ARM to 3, huge winner. AVGO, huge winner. And Intel. So it was all just reducing winners, raising cash. Incrementalism. All right. Long-term trades and buys. We're selling Cypher at a gain. We're selling Core Z at a gain. We're selling Circle at a loss. And we're selling Nokia at a gain. I'm buying AAOI. I'm buying Credo. I'm buying SNDK. I'm also buying CGEH. Guys, be careful with this one. Do not pile into this name. So, all of you don't leave this call and go buy this stock. Okay? It's
You're
less.
Right.
It's a
Yeah, I was gonna say that.
it's a little bitty stock, okay? And it's going to get moved if you guys all pile in at the same time. It's also over the counter. So some of you reps probably won't even be involved. But coming out of a bankruptcy, it's a restructuring play. They make these micro gas turbines. Micro turbines is what they're called for power. And it's a really cool technology. And it's real, and the company seems to have turned a corner. And I think it's a good speculative play, so we're going to add it to the long-term list today. But this is the kind of stuff, guys, I can't put in the sector rotation portfolio, and I can't trade it with Dutch. So we like to put these little flyers on the long-term list to give you guys a chance to play in that sandbox, right? That's where we'll throw the OTC names that we think are warranted. And we think that one's a good one. All right. We're at $1.15. We've answered a couple
Yep. Yep.
Throw a couple more at us.
Yeah, no problem. Yeah, I think that's a good way to do it too. If some of these are lining up, we don't have to backtrack. So Gessel, first time that we've he's asked a question is got trapped in SCO. Stock doesn't seem to react to oil going down. Dump it, hold it. Now, I know gas here's gone down 30 cents a gallon.
So you're still short oil.
Still short in oil. And for the sake of everything else, a lot of us want that to be right.
The question is, in what size and on what time frame? Dutch, you got any thoughts short term here, buddy? What's your gut tell you on this short term oil?
I think if you're going to go into SCO, well, if you're already in it, you're in it. Okay, stay with it. If you're looking to get into it, incrementalism, go in really easy, light, add. As we get closer and closer over the next 30, 60 days, it's impossible to time this, okay? But as we get closer and closer, we're going to see oil drop. But you can't time this like all of a sudden take a huge slug of it today and expect to be right. If you are, you're lucky. Mm-hmm. That's all. Luck.
Guys, I'm going to tell you, I think Dutch is right. I kind of agree with Dutch there. And what makes me somewhat confident that this eventually goes down is I think at this point, it's really clear that Trump is not going to put boots on the ground and that the idea of us invading Iran is off the table. I also think the split between us and Israel seems to be pretty clear now, and that they're trying to break the negotiations up into two distinct sort of platforms. One is U.S.-Iran, and the other is Israel-Lebanon, and the United States does not want the Israel-Lebanon conversation as a part of the other. So I think that's a clear distinction that's been drawn. And so I think those are probably positive signs for some type of deal being done before the midterms. The other interesting thing about oil is there was a great article that I shared with the DA guys from Bloomberg over the weekend that talked about why oil wasn't at $200 a barrel. And it just laid out all the fundamental reasons, meaning a huge amount of it's been rerouted. The United States is a giant exporter now. You've had giant drawdowns of inventories that were in storage. So it's, a combination of fundamental things that have kept the lid on it. But we are getting low in stored oil. The Strait does need to be reopened. Europe and Asia are facing a real crunch in refined jet fuel and other refined products. And so the pressure will grow and continue to grow from non-U.S. sort of places to get oil flowing through the Strait again. There are also vessels flowing through the Strait. I read the numbers are increasing, and Iran's ability to slow that down seems to be diminishing. So I think you're going to see traffic moving through the Strait in a growing number in the next 3 to 6 months, and that will bring the price of oil down. And maybe it doesn't happen in some sort of magic bullet manner. Maybe it's just a slow bleed, Dutch, in this position down as, the whole spike gets unwound over time, which is kind of what's been playing out. Good question, though.
Yeah, Roger, you look like you have something.
Roger, what do you got to say,
man? You guys were quick to the punch, but yeah, it's I am short also in a fairly large position, and I'm not worried about it for all those reasons. It's a long-term play. It's going to be volatile. It's headline driven, so every day is a new day. But if you look at the chart, it is a wedge. As Z pointed out, you're going to get that point of decision where it's either going to break to the upside or the downside. I didn't I'm pretty sure it's going to go down. It's, the strait is slowly opening up. There are insurance companies are starting to look at insuring loads go through. So yeah, I'm bullish that it that oil prices will go down, and bullish with SCO.
Roger, what is the mood in the oil patch here at $90 a barrel? They're probably okay here, but they probably would rather it get back down to 80 or 75, wouldn't they?
Well, it's yeah, they're looking at it. A lot of the companies are hedging like crazy to take advantage of the short.
So they're selling this, they're selling into this crazy to lock in this price here because they know it's just an unbelievable number for them at that level.
Absolutely true. And so that's what's giving me hope too, that they see more clarity than I do. And yeah, they're hedging. Trying to lock in as much of this high price as they can. The oil curve is backwardated, which also gives me some confidence that SCO is the right call. And it is. The 1 year out is at about $70 now, so that's good news.
That curve is definitely it's been that way the whole time too, Roger. It has signaled that. And I think Roger's point, guys, about the majors selling into this is really. I'm really glad you brought that up because you got to realize that if you're ExxonMobil or Chevron, that this is. This is like a Christmas. So you're selling this 90, 96 dollar barrel oil, and you're going to continue to do so as much of it as you can to lock in that price, and that has kept a cap on oil as well. All right, hey Godfather, bring up what we got left, and we'll let these fine people go here in a few minutes.
Yep. Okay, so Dan P says Palantir trading off major support at 130, but also trading below 2050, 200. Yeah. Do you like this for a longer term play?
This is one of these stocks that we've been watching. We're not in it, right? Not in any of the strategies, but it's the poster child of AI. It is interesting because I would tell you this was one of the most overbought stocks I'd ever seen on kind of the weekly, monthly level. And of course, you've got the Michael Burrys out there saying, hey, we got a bubble. What I like about this chart is that on the weekly, it looks like I'm getting that high level base that I wanted and that you're going to hold this 120 mark. I think the only problem with being a buyer here is I think you're going to be in this base for a while. So I'm not expecting this to become like some huge breakout leader again immediately. I think this one's got to grind for a little bit longer, and you're going to be stuck between 120 and 150 for a while. And really, I'm glad you brought this up because I really watched this stock a lot. This to me is one that if you can stay up here and not give 120 up, then the Michael Burry bubble argument is continuing to lose credibility. I think he's lost a lot of credibility as it relates to the GPU life cycle and the depreciation schedule argument that he tried to make, insinuating that a GPU only had a useful lifespan of 2 to 3 years and that they were using accounting tricks to lengthen the lifespans of these GPUs. That has been proven to be total horseshit. He was completely wrong. There are GPUs out there that are 5 and 6 years old that are still being used at 100% capacity. His argument about Palantir is a valuation argument that they can't grow into the earnings. So what I'm saying is this stock needs to go sideways for a year or two while this thing grows into its earnings to give it a chance. I don't think you want to be a buyer here per se. I think if you're already long and you've been long, you can stay long. But it is on the list that I showed you early in terms of AI software with Now and Snow and CRM. I think all of those companies survive and thrive long term as software companies with AI presence at their core. So even the nows and the CRMs that people question. I think these things, look, guys, a lot of this code that's being generated by AI is buggy. People are not going to get rid of their CRMs with really critical mission critical data off some sort of vibe coded CRM internally done. It's just not going to happen. So software is not going to be destroyed by this movement. They're just going to be winners and losers. All right, next question.
This is a good one. It kind of touches a couple of different ones. So this one's on AVGO, and I know Dutch brought this up. So this is a DA guy now. For those that don't know, that Z has been really working on doing calls and bare bull calls for DA people. So if you are, shameless plug, if you are interested in doing that and you do want to even learn more and you think that doing something really controlled environment could help, reach out to me at support@carnivoretrading.com and I will happily get on a call with you about direct access. So the question is, AVGO has calls that expire every other day. It's got the theta moves are often pretty big, and this company is a behemoth. The question is, is there a strategy here to implement what you're doing with the bear bull spreads?
So look, we've got a bull put spread on that has not gone our way here. We've got some time left, so it's not as if the trade's over. We've got kind of an interesting setup too, because we had this nasty sell off after earnings from 495 to 385. You're sitting at the 50-day. Look, guys, with these types of opportunities, if I wasn't already in this one, the play would have been obviously to come in on Friday and to put in the spread down at the 390, 380 level, because you already had it come your way pretty dramatically. But nonetheless, if you really believe in this company and this stock, which I do
too.
You could come in and do a couple of different things here. And these are some things that we would touch base with the guys on the DA thread about. If you were so inclined and had the cash to buy the stock, you could definitely sell a naked put here at around 395, or even say 400. Be even more aggressive. Take that premium in and say, hey, you know what? I'd be a buyer of the stock at 400. You collect that premium. You get that premium from selling that put, and then if the stock closes below 400, the stock will be put to you. If it was above, you would just collect that premium. Now, we're not doing a lot of cash secured puts in this environment. We're doing what are called bull put spreads, vertical put spreads. A lot of people call them vertical spreads. Ours are typically bullish, and we typically do them on stocks like AVGO that we have a lot of confidence in, have a lot of liquidity in their options, so that we don't get eaten up on spreads, but also have enough sort of volatility, implied volatility, and sort of daily stock volatility to make the options worth trading. A lot of stocks like Apple, there's not really enough volatility sometimes to give you enough to play with. But with AVGO, this is the perfect example of a very volatile stock. So the naked put sale will be one. Hey, our vertical put spread that we did on Thursday was perfect. It was just the timing was wrong because it was before Friday. But what we want to see, all that's got to happen is we got to get this stock back up above 420 before the 19th, I think. Yep. So we've got lots of time, and all we need is this stock to get back up into the range. If you didn't enter that trade on Thursday or Friday, today would be a great day to enter that trade. Okay.
And I think Jen showed me the updated list. I believe you're still at 100% success ratio on our daily
S&P options. Yes. We are, guys. So
okay, I was gonna say, I know we're not allowed. Most people won't say 100%, but we are in fact 100%.
So our daily option trades on the S&P, we hadn't had a loser there yet. So some guys have had a good run with that strategy. We haven't had a trade in the last 2 days because of the market sort of conditions, but I would imagine we'll have a couple this week, given the setup that we have now. So, but yeah, guys, what we're doing on DA are vertical put spreads on tech stocks that we would be okay owning, If you're a big whale, you can do naked put sales. Don't encourage that for most people, but we do have some whales out there that will use the put sales as a way of entering the stock. But yeah, the AVGO example, this is a good one because, quite frankly, you've seen this massive sell off. You've seen volatility pick up dramatically. So there's some richness there to the options. The 200 days not that far off. You should sort of have some support here in this area, right where the old highs were. So this 385 mark has been a significant number in the past. So I like this setup. If you didn't enter that trade with us on Thursday, you could very come in here and sell 395 and buy 385 expiring on the 19th. That'd be a great setup from here.
They're like the number one, right? Meta, Google. I mean, they're like the number one provider for them. I mean, this company's got a lot of usage for people that can't.
Yeah, hey guys, Broadcom
can't duplicate what they're doing.
Broadcom is the $1.8 trillion company nobody's ever heard of.
Right. Let's just get Bradley's in as the end one, just because we don't want him to think we left him out. He wants to know about Hinge, HNGE.
Hinge Health. Bradley, I saw this one and I've seen a couple of others in healthcare percolating. That this is a software name, but it gets lumped in with healthcare. This is a sloppy trader, so I don't think we're going to be trading it. But however, I've looked at it for possibly the long-term list. It's not going to fall in the sector rotation list because the sector is not hot enough yet. But this is the kind of name that I look for more on the long-term list. It's a new company, new story, sloppy trader, but you did break out, Bradley, and you kind of are now in price discovery mode right up here. So now that you've taken out this old high at 62, that should be your support. So if you are a buyer, you can lean against that number, and then maybe we're going to get a leg here. It's been a while since I've checked in on how they're doing. Let's get a little score. See how they score, Bradley. So we got strong buy ratings from the SA analysts. Got 85% gross margins. So more immune to AI. Let's see. Leading digital health platform addressing musculoskeletal conditions. It uses computer vision guided exercise therapy. I completely remember this now story. Now, yeah, this was a really cool story, Bradley. Let's take a look at this. Let's see how it scores. Probably doesn't score quite as well as you want it to yet over in Market Surge.
Y'all, for what he's doing right now, because we do have a academy coming up in October. That's for people that have never been, or just people that just love coming out to Vegas. What he's doing right now, Z teach. When you leave, you're going to be able to do what he's doing. So we do have that coming up in October. There's my
guys. Look, I'm telling you, if you're a carnivore and you have not been to an academy, you really need to come because, and I'm not even really doing the sales thing here.
Right. That's what I mean.
Nobody ever comes to the academy and says, that was shitty, I didn't learn anything, and I didn't have any fun. Like, ever. Nobody ever says that. Okay?
Definitely not all three.
It's like, if you come, you will learn something, you will be a better trader because you will really like have some things driven into your head, and you will have a great time, and you will eat a lot of great food, and then you're going to meet a bunch of really awesome people. And the thing, guys, that we've also learned is that some of you out there are living pretty boring lives all alone in your house too much. This is reality.
That's right.
You don't get out and go out to dinner with your friends. You don't go out with your spouse and meet people. You don't go to the clubs anymore.
Yep.
And so when you get out in a really cool environment and you're surrounded by interesting, intelligent people who have intelligent things to say, it's exciting, and you just have a great time. Dutch, look, I got Dutch all fired up. He doesn't even know he's on mute.
He know he's on mute. He doesn't even know
he's on mute, but I can see he's like agreeing with me. He's like agreeing with me.
I mean, that's how we met Bradley. I mean, y'all, this is how you get on the inside. Like Bradley.
That's right. And look, man, Bradley's a guy who he comes to the academy and now he finds things and he brings them up. He's like, look, this hinge thing. He's like, this is a very interesting company. What they're doing is very interesting. And so now he's noticed because he's come to the academy. Hey, look, Z, it's broken out, man. You're in. So when you come to the academy, you kind of get to see a part of carnivore that you'll never get to see unless you meet Dutch and I face to face and get to interact with all these awesome people that'll be there with you. And that's the plug.
So that once they choose that date, I gave them a couple options on Friday. Once they give me the exact date, I will get that information out for the October, maybe November academy.
And hey guys, there'll be new stuff because at the last academy, I had a whole section on AI and X and how I found, hey, like if you came, the other thing, you came to the academy, you got SIVE at $5.
That's right.
Everybody did. Okay, that was the academy pick for coming. We didn't give that pick to anybody else. We didn't throw that out to the general carnivore audience. We had a advisor who I will not name his name. He took a Roth IRA and put all the money. It was like a little dinky a Roth IRA he had. He put like 30 grand into SIVE in his Roth IRA and like 5x'd it for coming to the academy.
Yep.
So, you come, you get a great pick, you meet great people.
I probably talked to him on the phone 10 times to get him to come to the academy. Now he can't wait to get to the next one.
Yeah. So if you've never been, you gotta come and experience it. But Godfather, look, that Bradley's question is a good one. And Bradley, I think all I'm really missing from this story is just some more time to give it, the chance to develop into a leader. We've got a group relative strength rating of 67. So your RS is 87. So you're just now getting in the 90s. If this group improves, that's a winner. I told you the other one I had noticed was Oscar in that insurance space. And, look, that's a good looking monthly chart. I know some doctors that hate this company.
Yep.
There was a doc that was a carnivore. He said, I won't invest in that company on principle. I was like, all right, man, I hear you. They must really suck if you feel that way. But
I think that's why we bought it.
Anyway, so all right, hey, we're at 12. Cool. Yeah, we appreciate you guys staying here with us for an hour and 40 minutes. We do this every Monday. Guys, we do a DA call every Thursday now. So if you want to hang out with us more, join DA.
Yeah.
If not, we'll see you next Monday.
Thank you, Dutchman. You got anything, sir, before I let him go? You're still on mute.
I know. I was just doing that.
Hey, Dutch, I love
the subtitles. I
love the new Americana seed.
Hey, I'm having so much fun collecting these antique farm-oriented signs, man. It's really a lot of. It's really cool. And
that's a new addition, man. I noticed it. First thing I noticed.
Yeah, went in over the weekend, and one of these days, let's see. Well, I should probably show you guys this. I don't think anybody's seen it yet, but I'm gonna move the camera and show you this piece of art that was done in out of solid copper, and how they cut a silhouette of a cowboy into the background here. So I'm gonna see if I can't get this right now. Let's see if I can get this right. I don't know if I've got the ability to do it. There it is on the wall.
Oh, there it is. That's it.
Well, that's
very cool, man.
That makes sense.
Oh, wow.
Anyway, we got the fireplace. We still got some finished work to do up above, as you can see, but we got the golden lion up there on top of the fridge, and we got our American flag over there. We got our deer antler going. We got the whole place going. We're still in construction mode here a little bit, but Oh, and by the way, there's the massive server in the corner. That's a computer server with dual satellites on the roof here pointing to the mountains behind, two different, so that I'm never down. Plus, I've got 3 Tesla batteries in here for backup, so that if the power goes down out here, which it occasionally does, I can actually run for about 4 weeks without any electricity coming in here.
Wow.
So I should never be down. And if one satellite tower goes down, it automatically switches to the other satellite tower. And I have no idea how I found these guys. Well, actually, I do. The beautiful one was messing around in town, and she met the CEO of this company, and she said something like, "Hey, I really need, my man really needs something that's going to be up all the time and really smoking fast." And he goes, "Well, that's what I do, and my company is small, but we deal only with corporations that are willing to pay a lot of money to make sure that they're never down. Now, we're not trying to compete with Cox or any of these other guys." And so I
That's
met the
limited
guy,
something.
and they said, "Let's do it anyway." So Carnivore will never be down, no matter where we're at here. So not to say that we don't have some computer glitches now and then, but
Rare
thank
now.
God, Godfather and the others can usually figure that stuff out. So anyway, thanks you guys.
Yeah.
We love
Dutch
you.
painted that painting, just so you know. That flag is probably my favorite painting that he did. Dutch made that. I don't think a lot of people know how talented this man is. There's my shameless plug for Dutch.
we got a group of guys from West Point that whenever I paint one of those, they snap it up. So it's kind of cool.
Yep, cool.
Nice.
Thank you, brother. Thank you, Roger. Thank you.
Yeah,
All right, you guys. Thanks.
All right.